Anthropic's new AI tool sends shockwaves through software stocks. A market reaction rooted in structural anxiety. Global equity markets saw sharp declines in software-related stocks this week as investors reassess the long-term impact of artificial intelligence on established business models. The reaction reflects a deeper unease, whether the software sector is facing a temporary wave of innovation-driven volatility or a more fundamental structural challenge to its economic model. For investors, this combination raises a direct and uncomfortable question. The investor logic behind the sell-off. The reasoning driving the repricing is relatively straightforward. Debate over AI capability versus domain expertise. Despite the sharp market reaction, there is significant debate over whether general-purpose AI can truly replace industry-specific software. Historical parallels and past AI scares. The current episode is not without precedent. Employment implications add another layer of pressure. Adding to market unease are statements from technology leaders about AI's potential impact on white-collar employment. A turning point or a temporary correction. Whether the sell-off marks a lasting turning point remains an open question. Strategic assessment. The launch of Claude Cowork has forced a broader reassessment of value creation in the software industry. The market reaction reflects not fear of a single AI tool, but recognition that the economics of software are entering a new phase shaped by artificial intelligence.